Hi everyone, in today's video we are going to learn about the statement of retained earnings. What is statement of retained earnings and what are the examples of retained earnings and how you could calculate the retained earnings, etc. we will see in today's video. Okay, the statement of retained earnings is a very brief financial statement. It has only one purpose, which as you would expect is to detail the changes in the company's retained earnings over a period of time. Okay, the purpose of preparing the statement of retained earnings is to overview or to look for like changes in the retained earnings from previous years to current year. Okay, so over the period of time company calculates the retained earnings and it prepares this statement to get a better idea of like increase in retained earnings or a decrease in retained. It analyzes the retained earnings by viewing this statement of retained earnings. Okay, so again, retained earnings is the sum of all of the company's undistributed profits over a entire existence of a company. We say undistributed in order to distinguish from profits that have been distributed to the company shareholders in the form of dividend payments. Okay. Uh, After company earning profits, there will be two types of profits. One is distributed profit and another one is undistributed profit. Okay, distributed profit means the profit which we have distributed to the shareholders in the form of dividends. Okay, whatever the profit remains after distributing the dividend to the shareholders, that profit we call as retained earnings. Okay, suppose a company earns gross income. Out of that gross profit or gross income, out of that we will deduct some indirect expenses, operational, non-operational, etc. expenses, and the company comes to like income statement comes to net income part. Okay, after that, out of that net income, what we do, we pay taxes to the government also, so we need to deduct that also. If we deduct that, we will get profit after tax. Okay, after getting the profit after tax, company calculates the dividend percentage. Okay, and as per that percentage, the company distributes dividend to the shareholders, and that profit or that distribution is called as distributed profit. When we minus that distributed dividend from profit after tax, the remaining profit or the remaining earnings we which company get is called as retained earnings. Okay, we will understand this by one small example. So here it has given that ABC Construction is formed on January 1, 2011. As it was the formation day, the company had no retained earnings. That is, the retained earning balance was zero. Over the course of 2011, company's net income is $50,000. Company has earned $50,000 net income over the period of time. Okay, and in December of the year, it pays dividend of $20,000 to its shareholder. So now we will calculate retained earnings. So retained earnings as on the beginning, that is 1/1/2011, was $0, and net income the company has earned was $50,000, and the dividend paid is $20,000, which we will minus from the 50,000 rupees because dividend has been paid from the whatever profit the company has earned. Okay, so the remaining profit is called as retained earnings as on 31st December 2011, that is 30,000. Again, if in 2012 company has earned net income of $70,000 and it again paid a dividend of $20,000 to its shareholders, then what would be the net retained earnings as at the end of December 31st 2012? Okay, so beginning balance was 30,000 because as on December 31st 2011 was 30,000, so this closing balance will become opening balance in on January 2012. Okay, and the company has earned $70,000, so we will add that to retained earnings, and out of that company has paid dividends of $20,000, so it will get deducted and the remaining retained earnings is 80,000. Okay, so in 2011 retained earning was 30,000 and in 2012 the retained earning was 80,000. There is a hike or increase of $50,000 in retained earnings. Company is performing very well. By viewing these statements of retained earnings, we will get to know that company is performing well and company is earning lots and lots of profits. Okay, and retained earnings also act as a bridge between income statement and balance sheet. Okay, it takes information from the income statement and it provides information to the balance sheet, because retained earnings we will calculate after preparing our income statement. Okay, income statement is prepared to get to know the net income of the company. Okay, so it acts like retained earnings takes information from income statement and it provides information to the balance sheet. Okay, whatever net income we have earned is shown as net is shown in income statement, but retained earnings is part of balance sheet. Okay, so we will maintain retained earnings in a balance sheet, and in next year whenever the company earns profits through net which shown in income statement, that profit we will add it into retained earnings, which is a part of balance sheet. So it takes information from income statement and it provides information to the balance sheet. Okay, so the final step of preparing income statement is calculating the company's net income. So here it is a pro forma of income statement. So first one is revenue, sales, and gross profit we have earned, expenses like rent, salaries and other admin expenses or operational non-operational expenses. So total expenses is this 2,40,000 minus 1,50,000 is the net income, that is $90,000. Net income is then used in the statement of retained earnings to calculate the end of year balance in retained earnings. So retained earnings at the beginning was, for example, $40,000. Net income we have calculated just now, that is $90,000. Dividend paid to shareholders, for example, $50,000, and then the retained earnings at the end of the year was $80,000. So this retained earning ending balance of the retained earnings is then used to prepare company's balance sheet. Okay, in company's balance sheet we will show retained earnings as a part of owner's equity. Here it has shown. Okay, in next year whenever company earns net income, that net income will get added to this part after calculating retained earnings. Okay, so now coming to dividends, it is not an expense. So here it has given that when first learning accounting, many people are tempted to classify dividend payments as an expense. It's true, they do look a lot like an expense in that they are a cash payment made from the company to another party, and here another party is the shareholders. Okay, unlike many other cash payments, however, dividends are simply a distribution of profits as opposed to expenses, which reduces profit. Because they are not a part of calculation of net income, dividend payments do not show up on the income statement. Instead, they appear on the statement of retained earnings. Okay, they are the paid out of profits, they are the distribution of profits. So unlike expenses are the payment made from cash, like it is not paid from the profits. So dividends are the distribution of profits, so it is not an expense, it is part of statement of retained earnings, it is not shown as an item of income statement. Okay, retained earnings, it's not the same as cash. The definition of retained earnings, the sum of company's undistributed profit over the entire existence of the company, makes it sound as if a company's retained earnings balance must be sitting around somewhere as cash in a checking or savings account. In all likelihood, however, that isn't the case at all. Just because a company hasn't distributed its profit to its owners doesn't mean it hasn't already used them for something else. For instance, profits are frequently reinvested, as I told you, it can be used in expansion purpose also. Frequently reinvested in growing the company by purchasing more inventory for sale or purchasing more equipment for production. Okay, retained earnings is not sitting as a in the form of a cash. Okay, if it retained if the company has not distributed profits, it doesn't mean that company, like, there is no distributed profit at all, because the company has, like, invested some part of retained earnings in purchasing some goods or purchasing some businesses, takeover of businesses or expansion purpose, entering into new market, or like applying new strategies, etc. Okay, so this is the brief of retained earnings. So I hope you like this video. If you have any doubts, please post those doubts in the comment section below. And if you like my videos, please if you are interested to know more about accounting, or if you are keen to learn at some other topics, then please let me know. And if you like uh, like this video, if you share this video and subscribe to my channel, that would be helpful for me to prepare more videos like this. So keep supporting me and keep enjoying my videos. So in next video we will come up with some new topic. So till then, stay tuned and enjoy my videos. Okay, thank you so much.